I did before that, I spent the last 15, 20 years in financial services, banking industry, and I had two different distinct careers. One was in capital markets, and I'm a former institutional derivatives trader in currencies and interest rate markets in the G7 economies. And my second career was in strategy consulting, and I'm a former partner and head of advisory for banking practice at a Fortune 200 global consulting firm. And in 2019, just as a personal backdrop of that, I retired. And of course, then COVID happened soon after that. And so I had a lot of time on my hand. I started educating myself about oceans and climate. And soon I realized I can't be passive about what's happening. I have to get actively involved and help in whatever form and shape I could. And so from that, I led into Oceanfront Institute. And I've been focusing a lot on ocean-based CDR, which, like a lot of us here believe, has a critical role to play in both combating climate risk, but it can also unlock a largely untapped economic opportunity, and that got me really excited. So our panel topic today is facilitating climate mitigation through investments in oceans-based solutions. Now, that's a mouthful. It could mean different things to different people, but for our panel today, we're going to focus on ocean-based CDR. This is part of the MCDR track, and that's our primary focus. In terms of the roadmap for the panel discussion today is Q&A format, and we're going to delve into two categories of questions. One is, what is the current state of funding in MCDR? And the second is, what do we need to do to amplify and accelerate funding going forward? And hopefully we'll leave some time for Q&A in the end. But before we turn into our panelists, and I'm going to request them to introduce themselves, but there are two scope definitions that I should mention in terms of context. One is when we say MCDR, we don't mean just the CDR projects. We mean the entire value chain, the entire ecosystem around MCDR. So that includes standards, baseline measurements, MRV, voluntary carbon markets, and so on. The second is it also encompasses the broad range of MCDR approaches that are in play. So it includes nature-based coastal solutions, what people call blue carbon, but also MCDR approaches that are being designed for at-scale deployment in EEZ and the high seas, such as OE and so on. So it includes the whole spectrum. So with that, I'm going to turn to the panelists. We're excited to have you here. And if you can introduce yourself, the organization you represent, but we're going to dovetail that introduction into the first question around the current state of funding. So if you can also talk about what is the role that your organization is playing in MCDR. Examples would be like what's the scope of funding, which area in the value chain is it funding, what type of companies, what stage of life cycle are they in. But more importantly, how does that funding align with your funding philosophies or your funding objectives? That would be great. So we'll start with you, Julie.
Thanks very much. I think those of you who were here yesterday probably know my full life story. For those of you who weren't, I'm an Earth Systems scientist turned investor in Ocean Climate Solutions. I'm a partner with a brand new Ocean Climate Solutions venture capital fund called Propeller. And we formed to catalyze and accelerate ocean climate solutions, and one of our areas of investment is in across the full value chain, from the solution delivery itself as well as the MRV side of things. And we see a significant role for the science in how we approach the investing. We're very close to the science community. We have a close partnership with Woods Hole Oceanographic Institution, and we are a $100 million fund, a little bit over $100 million fund. We invest in pre-seed and seed, and even earlier at the project stage as well, particularly when we're working with ocean science scientists and their innovation. We formed because we saw a gap in that space where working on the science side and translating that into the larger markets that are starting to form around these activities. And we really wanted to be part of that acceleration and to work with others here represented on the panel in bringing a diversity of funding into the mix that could cover this full range of what's required to go from the innovation stage out to meet these potentially quite large markets that are growing around these activities and this work. So thank you.
Hey everybody, my name is Mitch Rubin, and I am a Director of Innovation at Elemental Accelerator, where I specifically lead our food systems, nature-based solutions, and a lot of our carbon removal work. Elemental is a nonprofit investor that is really dedicated to climate and social impact, and we really try to fill this gap of helping companies transition to more scale and de-risking a pipeline of projects that can then be, usable by customers and later stage investors. And we really try to take a people and place-based approach to what we do. So those projects, we want to make sure they're being demonstrated and deployed equitably and with communities. To date, we've been around since 2009. We have funded over 150 companies, over 100 technology demonstration projects, and we've committed $57 million to those companies, which has led to $8 billion in follow-on funding. And how we work with companies, it's a variety of funding opportunities, coaching, and wraparound services, typically from that early pre-seed all the way up to Series A, B, and C, especially on the project side. And we work across a number of sectors in the climate space. Two areas that we've really been trying to double down on lately are both oceans and carbon removal. On the ocean side, we've worked with a couple companies solving things like reducing bycatch, sea level rise monitoring, and on the CDR side, a number of different solutions, more on the terrestrial side so far, but we are very open and active to ocean-based, and one company that we've had the fortune of working with very closely over the past year has been Vesta, who's a part of our portfolio. And just a side note, we have our applications open for funding right now, so if you're interested, come meet me after this.
Hi everyone, my name is Antonius Gagern. My background is marine biology and natural resource economics, and I spent most of my career advising foundations on grant making at the Ocean Climate Nexus. And in the last 5 years, that work, or 4 or 5 years, that work has entirely focused on ocean CDR or marine CDR. So I've helped shape some of the philanthropic strategies in this field. And 18 months ago, I joined Additional Ventures, which is a philanthropic foundation, to lead the foundation's ocean CDR work. And initially the idea was to continue supporting a little bit of the science and a little bit of the technology and the field building in that space. But a couple of weeks into my joining, we took a step back and said, what is this field really missing right now? And imagined a somewhat more ambitious effort, which then translated into a pretty big multi-funder R&D program that is entirely focused on ocean alkalinity enhancement, which we incubated within Additional Ventures, but then spun out into its own entity. And so this ocean alkalinity enhancement program is really where I'm spending most of my time on these days. And it involves Additional Ventures, but also 9 other foundations, some of which are in the room.
Hi everybody, my name's Kat Martini. I come from a background in greenhouse gas accounting and RED+, and helping countries implement their NDCs. I saw in that field a big lack of shovel-ready projects to help with countries' mitigation measures, and so for the last several years I've been working with Microsoft's carbon removal team. I'll give you a little bit of background about Microsoft's carbon and sustainability goals in 3 points. We have a reductions first policy. I'll tell you a little bit about our funding for carbon removal, and then also our oceans-based CDR procurement. So Microsoft's strategy is really, we need to reduce first and then remove. So Microsoft has committed to reduce its scope 1, 2, and 3 emissions, 1, 2 to near zero, and scope 3 emissions by over half by 2030. and to replace all the Scope 2 emissions and electricity consumptions with 100% renewable energy via power purchase agreements via 2025. And so then what we can't reduce, we're going to remove. And so that falls onto my team. So we have been committed to not just removing the rest of those emissions, but also remediating back all of Microsoft's historical or legacy emissions to since the founding of the company in 1975. And then secondly, how is Microsoft funding carbon removal? So we have a fee, a fund, and then we procure or buy. So the fee is an internal carbon fee that's been in place since 2012, and this is used to incentivize behavior change across all of our different business groups. The fee helps fund the fund and the carbon removal team overall. We have a climate innovation fund that is $1 billion fund to be allocated over 4 years. It's already been about half allocated, and that's for direct investments in companies, funds, and projects to support the existing needs and technology to scale the carbon removal market. So for instance, innovative MRV technologies or the like. And then lastly, the buying or procuring, which is my team in Microsoft, and the carbon removal team, we're procuring both nature-based and engineered solutions. So across the whole gamut, forestry, improved forest management, mangroves, direct air capture, BECCS, biochar, the whole like, bikers. For the last several years, we've been procuring over 1 million tons of carbon removal annually since 2020, and plan on scaling that towards 5 million tons of procurement every year by 2030. We estimate right now that the carbon removal market that meets our high quality criteria is about 3 million tons. So a big part of our remit is also supporting activities that grow the carbon removal market. We have published criteria guidelines on what we consider high quality carbon removal. Please feel free to check those out. We do a decent amount of policy engagements as well. And then by 2030, we're hoping to have our portfolio roughly be about 20 to 30 deals across both nature-based and engineered. Each of those deals we'd ideally like to see be about 250,000 tons per year, which is a big scale up. It's a big, big scale up. And then lastly, our ocean carbon dioxide removal procurements so far have only been 2. We've done the Indus Delta Capital Project, which is mangroves in Pakistan, and we procured about 110,000 tons of carbon removal from that project. And then I'm thrilled to announce that we've worked with Running Tide on purchasing 12,000 tons of their kelp sinking project, which is fantastic. And Microsoft is proud of the work we've been doing with Running Tide in terms of innovative contracting. So the way that that deal is structured is the deal size doubles each year, contingent upon improvements in the MRV system. So as we've heard for the last several days, I'm sure we'll hear more tomorrow, there's a lack of direct observational MRV in the ocean CDR space. There's lots of models. And so to help use our procurement dollars to push forward the development of that MRV has been something we're really proud of partnering with Running Tide on. In the absence of, ocean CDR certifications in that space, it's going to be really important to be able to prove that this is actually happening and that it's being done in a safe and equitable manner. Thanks.
I'm Mark van Keitz. I'm with the Grantham Foundation. Joined about 1.5 years ago from a prior tour of duty at ARPA-E, where I started the Mariner program on macroalgae cultivation in the open ocean. Overall, had spent most of my professional life at the interface between biology and engineering in various forms, startups, industry, academia, and then landed at the Grantham Foundation, where I had the great fortune to really push into the climate space with the motivation of really driving forward cutting edge technologies. And we do that both on the grant side as well as in the direct funding side, with individual investments into companies on the pre-seed, seed, and Series A level. but we also recognize that it's important to not just support individual companies, but also to support the ecosystem that is emerging. And so we put a significant amount of grant funding into that space as well. We are broadly interested in the climate space, but have focused a lot of our funding on carbon dioxide removal and really taking the full gamut from direct air capture, more terrestrial, plant-based processes like agriculture. Then we also do all kinds of rock reactions, so basically mineralization, and that is in many ways then a cut over into the space of ocean CDR, where we are covering areas including ocean alkalinity enhancement, direct ocean capture, as well as algae-based solutions. And so overall, over the last 5 years, we have spent north of $35 million in that space, and are really excited to see so many people here and this community coming together, and look forward to continue to stay very active and help push the community forward.
Thank you very much. Actually, that's pretty impressive to hear the different approaches to funding being taken by all the different organizations being represented here. So, but still sticking to current state of funding. Now, if you take a step back from your own respective organization, I'm curious what trends you're observing among funders that are similar to yourself. So Julie, it'll be other VCs, Mitch, it'll be other accelerators, and so on. For Antonius and Mark, it'll be other philanthropy and foundations. What's the trend you're observing? Is the funding increasing? Is it deaccelerating? Is it stagnating? Where specifically are they funding and not funding across the value chain? So Mark, why don't we start with you?
I definitely, so one of the things, our investment entity has been called Neglected Climate Opportunities, and we have to a little bit adjust what is neglected. So when we started, I think there were 2 or 3 climate-focused VC funds. I think today we have probably close to 200. So we want to make sure that our investments are catalytic. So we look a little bit where are the areas that really need the attention. So we're excited about more people coming into this space and accelerating it. In addition to the private dollars, we definitely see an uptick in also federal money. So just the recent ARPA-E CO2 funding announcement, I think, is an important part. The NOAA funding, so I think that's really exciting to see, because again, it's not just about funding an individual technology, but also growing the ecosystem, because I think we had a lot of discussions around MRV, and that's, I think, something that's really important, and I see money flowing into it. We could probably still talk about, where's the money coming from for the later stages, but maybe we keep that for a separate round.
So the same way from Antonius, from your perspective, because from other philanthropies and foundations, what are you seeing the general trend?
Yeah, I see exactly the same thing. When I started working on this 4 years ago, so there was hardly any money spent philanthropically on this. Climate Works Foundation had just secured something like $5 million for an ocean CDR portfolio, which was immense, given how little was spent on that until then, in just a few years. And so Ocean Visions didn't exist, for example. And so a few years later, this is actually a field that academics recognize as an opportunity for their careers, and where people take notice. And the philanthropic funding, I don't know what it is exactly, but I would estimate that in the next 5 years, there's maybe somewhere between $70 to $100 million being philanthropically spent on ocean CDR. So there's an enormous uptick in that regard. And I think the interest will continue to go up, both in terms of philanthropic spending and in terms of public and private spending, which is why it is so important to move the field in a healthy direction, while de-risking it for the private sector.
Yeah. So Julie, going to you from a VC perspective, the one thing we often hear is, and I know Propeller sounds like a non-traditional VC, but is that a lot of VCs are allocating capital to MCDR, but they're not actively deploying it. I'm curious if that's what you observe among other VCs in the space or not, and if that's the case, what's hindering the flow of funds from them?
Yeah, I do think it's an area of rapid change. Historically, VC investing in the ocean space was largely centered on aquaculture and fisheries. Um, Even a few years ago, when I led early products for a climate risk analytics startup, I was in the climate tech space. That was a growing area of investment, and that bridged over oceans in climate tech didn't quite fully exist yet, and now it does. I think what I'm seeing is that some of that money that may be, in your words, maybe being delayed of deployment, I would suggest that could partly be there's an important role for the science within this. So, I mean, the way that showed up for me was when I was doing climate risk in a climate tech startup. I was being sought out by VCs to look at climate tech deals because I'm a scientist, and I was relatively unique in that space of having a product perspective and also being able to think about the science and investing side together. I was an LP in some of the early climate tech funds and did some ocean climate angel investing, which was my sort of path to being more centrally in the VC space. We definitely need more scientists who can understand the investing angles. And I also want to mention I also think one of the things that could help deploy more capital is the type of collaborative investing that the VC community can do with these colleagues here and these other types of entities. That represents non-dilutive funding, but it also represents really important capital at the early stages to get these ideas off the ground, to field the prototypes quickly, to see whether they can deliver and scale, and really get that validation early, so we're not waiting around multiple years to figure out whether something's going to actually be a viable solution or not.
Yeah, that's great. Actually, we were going to touch on that in the next question, because that essentially is a future funding model option that you're talking about. So Kat, sounds like Microsoft's taking a very progressive approach. And the way I understood the funding model is both direct and indirect. So direct would be, from the credit seller's perspective, also funding them to build adjacent capabilities that will improve the credibility of the carbon claims that they're making, right? So helping them fund some MRV capabilities or so on. But there's also indirect funding, which is, by paying a premium price for the credit that you buy, right? So like a premium over what the service compensation would, expect the price to be. So are you seeing other more global corporations that have, very progressive mandates for net zero, doing similar things, or is that kind of a unique thing for organizations like Microsoft?
Yeah, thanks. I think there is definitely a growing cohort of corporate actors that are interested in their carbon removal strategy and procuring what they would consider high quality carbon removal is. I think there's a little bit of ambiguity in the market right now about what high quality is. At Microsoft, we sort of see certifications like Gold Standard Vera as the starting point, but sometimes there's, you really need to look into additionality and baselines and all these things. So we sort of our due diligence goes above and beyond the certifications to ensure it meets our qualification of high quality criteria. And there are a number of other organizations interested in doing the same. Meta, Google, I'm in the Business Alliance for Scaling Climate Solutions, or BASC. So there's a group of us that are always talking about how to do this better, how to coordinate. I think there are also many entities that are still in the emission reduction space. So I think there's a deep need for clarity on definitions around what constitute a removal credit versus an avoidance credit. And for that reason, you asked about premiums. I think there is an investment case to say that certain entities really interested in high quality are willing to pay a premium for removal credits. I think that's something that is going to be need to worked out at a broader level. There's policy engagements, there's direct procurement, but yes, we are seeing a premium for high quality removal credits.
Okay, that's great. Thank you. So we're going to pivot now to the future state of funding. So essentially, what do we need to do to accelerate and amplify funding going forward? If you look at MCDR industry overall, there's like structural impediments almost on every front. Doesn't matter what it is, whether it's standards or lack thereof, baseline measurements, MRV, and so on. So it's everywhere. And if you look at any industry, it doesn't matter if it's MCDR or not, the more structural impediments, the big kahuna roadblocks that exist, the more it inhibits flow of funding into that sector, because that scares investors. But at the same time, you need funding to remove some of those structural impediments. So it creates a bit of a catch-22, right? So MCDR definitely has that. And so if you kind of unpack that and look at some of the capabilities, and I think, Mark, you were getting to that earlier. So let's say if we unpack what are the critical capabilities we need to advance. So let's start with ocean science and research. We know the science is still unproven for a lot of the MCDR, if not all MCDR approaches. We need more field trials, we need more tests to truly understand, A, the upside, but also better understand the risk, whether it's direct risk or indirect risk, right? The same thing goes with standards. Even though we don't have them, when we do develop them, they need to have a strong backing of scientific rigor behind them, because that's a critical component of adding credibility to the whole market. So what do we need to do to advance funding into pure ocean science and research, and more beyond traditional funders like public sector grants and so on? And I know, Julie, you started alluding to that earlier. But we'll come back to you in a second. But Antonio, like, given how important the R&D component is, do you want to touch on that?
Yeah, thanks. And maybe to set the stage, to just a few words about how expensive it is to do this right. Recently there were a number of publications, including the NASM report and others, that tried to estimate a little bit what it might take to answer some of the outstanding questions. And I think, like, looking at that, it is actually vastly underestimated of what it really takes to do this well, to answer the questions to the point that there's confidence in, that we as a society can have confidence in these techniques actually being impactful and harmless. Ocean Visions did a really nice analysis on what it would take to answer some of these questions for sinking seaweed, and they ended up with an estimate of $1 billion just for a few questions, just the field trials of that. So that gives you a sense for what it takes to do this right. So the OAE program that I run has these three different pillars. One is focused on getting the science right. One is focused on pushing the technology forward. And the third one is really about enabling the science. So putting into place test beds around the world where research can happen. Because right now the regulatory systems are not even in place to do that right. So in addition to funding, there needs to be actually much more of an enabling piece to it, piece of the puzzle that has to be figured out. And in addition to the regulatory question, there are also social license questions that just have to be figured out. But so given kind of this magnitude that we're talking about, many billions of dollars that we need to even get the science right for some of these pathways. So when we talk about ocean CDR, there's maybe half a dozen pathways, and then you dig down, say, ocean alkalinity enhancement itself has a dozen pathways. And each one of those pathways has different questions to ask, etc. To get that amount of funding, I think it's a bit of a, it's a bit of a push and pull. You need a little bit of the science that indicates that there's a there. And I think that piece can be philanthropically funded to then create the demand at societal and public funding level that massive amounts of money have to be spent in order to actually fully understand all of the risks and implications of that. So to get that amount of public funding in the US, this has to go through appropriations processes, and this is not my field of expertise. Only so much, to the extent that I understand what it takes to do this. It takes time, it's complicated, it requires both the surgical and the more, you know, base building at the Hill and with constituents. So let me leave it at that for the second.
Yeah, that's great to hear actually, because our observation is that, you know, philanthropies and foundations and endowments play such a critical role because their funding, even though it could be smaller in scale compared to other traditional funders, often sows the seed to grow that area and get it to a critical point where other larger funders get attracted to it and hence amplify the funding. So, which kind of dovetails right to Julie, what you were saying, you know, because if you look at the funding life cycle of, it essentially goes from philanthropies, you know, and VCs tend to come at a slightly later stage. So you talked about more researchers being, you know, more investment, have a better understanding of investment domain in general, but also that there could be different models even among VCs to fund research.
Yes, I think there's a lot of mutual learning in this space around what those models look like. I wanted to just return and make a few additional remarks on the other topic, and then we can come back to the other, which is, you know, one of the areas where coordinated work is really important is around the regulatory and permitting side of things. And there's a strong role for the trade associations that are springing up around the topics that we're engaged in to really help forge that path, as well as the test beds that Antonia spoke about. There can be a feel for some of these earlier companies, it almost starts to feel like that they're ending up doing a lot of project development on the path to scaling. And the extent to which that all of those aspects of the regulatory, the permitting, the financing related to complex project development can be de-risked through these coordinated mechanisms. I think we will see huge, huge benefits in that.
Okay. So now going to maybe a second area of capability, which is ocean check. So there was a lot of discussion on MRV yesterday. In fact, I don't remember the name of the person who said, let's call it probabilistic MRV because model will still be used, it'll still be inferred. So there's a lot of stuff actively still going around sensor development platforms and enhanced modeling. So curious as to what else needs to be done to accelerate that space too, because that plays such a critical role in terms of really, you know, creating confidence levels around the claims of how much carbon has been sequestered, what its durabilities, and so on. So Mark, let's start with you, given your prior experience at ARPA-E, and as you said, like ARPA-E is playing an important role right now in advancing MRV for MCDR. So what would your observations on that be?
Yeah, well, I really can't speak for Simon Freeman, who is the program director that is pushing the CO2 program forward. I totally agree that we need really a strong framework to assess the quality of the carbon credits that we are generating with this. And maybe one thing that I wanted to highlight in that context, we have had the privilege at Grantham to really take a look across the whole portfolio of all CDR technologies, and I think Microsoft has probably done the same thing. And I think it's really important that we don't silo ourselves in the MCDR environment. It's really important to be aware of what the benchmarks are, why oceans are advantaged in some areas and disadvantaged in others, and be clear and transparent about that. And one of the elements that at ARPA-E we talked a lot about is starting to get data on the cost curve on the board, because in the end we all know this is an incredibly big enterprise when we talk about the gigatons of CO2 that we have to remove, and if we put a price tag of like even a minimum of $100 on it, the numbers get pretty crazy, and especially because they don't seem to be generating a lot of other benefits. So there's really remedial costs. So making sure that we are keeping in mind how all these efforts are contributing to driving down the cost curve, and doing that in conjunction with validating that the quality of the credits, because in the end, only when we have good credits are people willing to pay for them, and scaling without the confidence that you have somebody that is willing to pay for them is not going to happen.
So Mitch, a lot of the startups we come across in this space, they tend to be focused a lot on MRV space in different forms and shape, whether it's sensor development or modeling or whatever. So from the funnel or the pipeline of startups that come through your door, whether it's for, which are the project track or the funding track, what are you seeing in terms of which area of the MCDR value chain there's more funding ask coming through incubators like yourself versus areas that actually don't see many startups coming from?
Yeah, I mean, I think what's encouraging, if you look at the broader CDR space and how over the past 3-4 years it's really taken off, and there's been a lot of companies with all types of solutions that have raised a lot of money. You're seeing that like within the broader space. I think you're seeing that on a new level within the ocean space, which is encouraging. We talk about the increase in funding opportunities that have manifested over the past few years. There's also the increase in number of companies that are trying to solve these problems with all of these different solution types. And within that, I think it's mostly been on the supplier side of different approaches to actually sequestering that CO2. And now you're seeing, I think, more companies that are focused more exclusively on being that third-party MRV provider. And you see like a similar kind of trajectory happen within like the soil carbon credit space, and how all of a sudden there's lots of MRV companies. And I think what's interesting, and was talked a little bit about yesterday, is there are the companies that were suppliers, that are suppliers, that have also really developed amazing in-house approaches to their own MRV that can potentially be used across the industry. And you also now have these more standalone MRV providers, whether it's focused on blue carbon or more like ocean flux modeling, et cetera. And how those two will work together, I think, will be really interesting as well. But all in all, I think, as you were saying earlier, Julie, like the need for the collaborative effort to provide the funding to reduce uncertainties for these technologies to flourish and get off the ground, like that's essential. But you can have all that, and unless you have the permitting to actually deploy, you're facing huge roadblocks. And that's also where like the policy side comes in, and the opportunities for ocean-based solutions to be written into the 45Q tax credit. Like there's a lot of other elements that go beyond just the tech being ready to scale.
Yeah, just a quick point on that topic. I'm actually really excited about some of the emerging technologies coming out of ocean science institutions that have been fielded in multiple deployments and are now at the stage to be brought out. So for instance, Matt Long, the other Matt Long, who's an oceanographer at Woods Hole Oceanographic, is spinning out a company to measure, to utilize the carbon flux measurement modality that he's developed over years in the lab. And Casey, if you're here, raise your hand. She's joining him as the CEO of the company. And it's called Subtitle, if you all are interested in learning more about it. I also wanted to give a call out to the modeling aspect of this and the collective seaworthy that's we've heard from yesterday, that really provides more of that glue that can create that connectivity across the MRV space. Because, until we have more long-range MRV capabilities on the measurement side, we absolutely need the models to fill in those gaps for us.
Yeah, go ahead, Kat.
Yeah, just to jump in on that point on MRV and funding, I think it's well said that there is an increasing amount of providers looking at third-party MRV. I think from the Microsoft perspective, it's challenging when the MRV is built in with the company, particularly in the ocean space when there aren't these third-party certifications. I think that's a big block to getting, say, traditional finance interested in, like, Bank of America, Goldman Sachs, these type of entities to be able to do project financing or debt financing. I think we are seeing a lot of philanthropic funding or VC funding, which is fantastic. But until we get certifications and third-party MRV certifications, that it's going to be hard to unlock that traditional finance. And I'll say, while there is a growing number of companies working in this space, there's likely to be a high failure rate in this new market. So, maybe even as high as 1 in 3, right? So we need many, many companies across many of the different verticals that you mentioned, like even going down into OAE or an ocean alkalinity enhancement. There's going to be a lot of failures. And if we're going to get to gigaton scale by 2030, we need a lot more companies and a lot more third-party MRV to unlock that traditional finance for trust.
Yeah, I think de-risk. Yeah, go ahead, Antonius.
Yeah, I think I wanted to make one additional observation here is that it is not clear at all where the MRV field will end up in 10 years and to what extent we can rely on models and to what extent we have to continue to rely on observations. It is not clear to what extent these observations have to be sensor-based or not. And so I think what's going to be really important, particularly from purchasers of ocean CDR credits, to send the signal very clearly on what the standard is and what the lowest bar standard is and how to raise. I really like this idea of continuing to support companies as long as they improve on their MRV, for example, because you cannot set the bar too high, otherwise you suffocate the industry where it is right now. My prediction would be that it will be prohibitively expensive to rely on sensors as we go to scale, so we'll have to figure out a way how to rely on models. But there's definitely a question about how do you combine observations and modeling in the next 10 years to create a high confidence level in the models.
Yeah, I think there'll be a healthy tension between the high cost of sensors, for example, or to what degree the cost can be reduced, especially when you have economies of scale, to what is the cost of relying on models where you have a higher uncertainty, right? There's a cost associated with that too. Maybe it's implicit cost. So I think there will be a healthy tension, and maybe at times unhealthy tension, that'll come through that. But I think we're probably still further away from that, reaching that stage in terms of our maturity life cycle. But I think there was a lot of talk about permitting yesterday, and so our third capability we're going to delve into is international regulations and domestic policies. It's pretty clear the international regulations, especially for high seas, is not suited to regulate MCDR right now, right? And there are implications of when you apply international regulations to domestic policies, especially how it pertains to private actors involved. And then there are, of course, the actual incumbent domestic policies that countries have, which at times do not help you from a permitting perspective, and at times will actually hurt you. It creates a roadblock. So you talked about the coalition-based approach, and again, coalitions of course require funding too for them to be effective and have the speed and the effectiveness that we want. What other efforts can be put into really influencing, more stringent focus on international regulations and domestic policies? So Kat, like you have a public policy background as well, and so from that and Microsoft's perspective, how does funding play a role in that?
Yeah, absolutely. I think Microsoft is really keen to, of course, follow all domestic legislations and all and regulations in every country that we work in. So just putting that out there. And right now, the ocean CDR space is out ahead of a lot of policies, right? So in the lack of policy clarity at the international, national level, it's going to disincentivize any type of further investment from maybe a less sophisticated corporate buyer. One of the things we're tracking pretty tightly, and it's not just coastal policy that's important. It's also international policy, this uncertainty around how our country is going to claim certain activities under Article 6.4 of the Paris Agreement or not. You know, there's going to be hundreds of billions of dollars that are going to be on the line when that piece gets worked out alone, and there may be, you know, a high risk for stranded assets. So until that's resolved, or until there is clear domestic policy on how to regulate ocean CDR, it's going to prohibit, you know, kind of the middle of the road corporate buyer from being able to enter that market, because they're not going to be able to tolerate the risk of those stranded assets. That being said, there are a few really progressive countries, you know, Canada, Norway, several countries in the Middle East that come to mind that are, you know, actively looking at their domestic legislation on the books and refining it to be able to unlock, realizing, okay, you know, this was meant to be to avoid open ocean dumping of plastics, right? Maybe these are a little bit different than how the CDR market has advanced. How can we use our domestic policy instruments to dial that back to allow these sorts of entities to move forward in the CDR space? Those are typically you know, countries that have ambitious climate goals, and but it's definitely going to be a blocker for traditional finance and big entrants.
Julie, did you want to add anything else besides the coalition aspect? Okay.
So maybe one thing that I felt was really helpful in the context of the macroalgae, NOAA had done an incredible job on marine spatial planning, and I have been talking with some of them that we in many ways may want to have a similar planning effort around ocean CDR, because it's just, there's an enormous amount of data already out there, but trying to structure that data and make it accessible in a way that is relevant to the various verticals of ocean CDR, I think, again, identifies areas to work with, to work in, and then communities to work with to prepare the ground, because it's not just a matter of putting a regulatory framework in place, but really also locally working with the communities. And that's, if you have an early identification of which areas are even suitable from a science and even from a marine resources point of view, it allows you to focus efforts.
It's a great point. So now sticking to the future state of funding, let's talk about infrastructural assets. So if you think, so this is beyond the scope of one CDR project or one implementation area. There are a lot of infrastructural assets that MCDR needs. Like, I'll just give some examples, the obvious examples. One is voluntary carbon markets. The markets today are, what, 2 billion in size, which is actually nothing compared to traditional asset classes, which are more than, for example, global equities is more than 120 trillion in size, global fixed income is more than 100 trillion in size. So it's very small. It's also, and as Kat, you probably live through every day, it's so cumbersome to transact in the voluntary carbon market. It's very fragmented, you've got a lot of small players. It doesn't have the effectiveness or the efficiency in place that you would expect from traditional asset classes. It doesn't have the risk safeguards in place to protect all the players involved in transactions, whether it's primary issuance or secondary trading. So that market infrastructure needs to be built. So imagine if we had everything worked. Tomorrow we have a gigaton of carbon removal and the carbon credits coming from it. The voluntary carbon market can't scale and manage it effectively today. So that infrastructure needs to be built. The second example would be baseline measurements. Like today, we don't have a comprehensive view of the current state of carbon cycle in the oceans. Forget about knowing a predictive state. And in the absence of that is the challenge of probabilistic MRV approaches we will always rely on. So that needs to be built, right? We can say the same thing about standards. So we need to build this infrastructure for the whole MCDR ecosystem to really leapfrog. But building infrastructure, as we all know, is expensive, it's hard, it takes time. It's beyond the pocketbook of one investor. So we need some non-traditional, different funding models, different approaches to really build those infrastructural assets so that we can truly realize the potential of MCDR. So I'll just open up this to the panel, like whoever wants to start with it. Like what do we need to do for that?
Okay, I'm just going to make a quick comment, which is that was a litany of things that we could potentially view as holding us back. I actually see those as opportunities. And I think that the people and entities who get going on that work will be well rewarded on multiple levels. And so I just want to encourage us all to see those as the true opportunity that they represent. And we have a lot of people here who are really big change agents in those spaces.
Go ahead, introduce.
I don't think that I have anything really to offer on this question. It's such a complicated one. I think what really resonates with me is the the need for data, baseline data, and getting that in place is really challenging because there's no market for that. And unless you have a market with specs for what kind of data you need, they're not going to be produced at that price. So I kind of like the idea of you know, the Ocean Data Fund, for example. I think that's what it's called, that raises somewhere between $100 and $200 million to create a demand for data, baseline data production, in the hope that it will find, you know, asking for the supply of that in order to, in the hopes of finding the demand for it down the line. And I think you have to do a little bit of this push and pull, because right now, in the absence of this market, it's very difficult to produce these kinds of infrastructure and assets that are required to accelerate the space.
Just if I could add one thing to the market to get there, if I had a magic wand, it would be third-party insurance providers. That's one thing we really struggle at Microsoft in terms of how to de-risk contract structures between buyer and seller, per se, in the event of project failure or non-delivery risk, physical risk of leakage, etc., or failure beyond what can be covered by the buffer pools. And in the spaces of CDR that even have certifications in buffer pools, you know, it seems like other portions of the economy have figured this out. So it doesn't, I would love to see more third-party insurance providers enter this market in a big way.
Yeah, and just to add on to that, I think we need to find ways to, in terms of creating that market, finding ways to actually integrate the range of uncertainty into these solutions and carbon credits to help create some of that demand. Which, you know, folks like Frontier are doing across a number of CDR solutions. And then we need more companies to follow the lead of Microsoft and all the Frontier members, First Buyers Coalition. Like, we just need that until the government can come around to start making some of these procurements and having that happen at the same time as all this other infrastructure and standard setting is built.
I think we're getting the evil eye, so I'm going to ask my last question, which is, so this is a rapid fire question. So imagine you had a magic wand and whatever you wished for came true. So what one thing would you wish for in the near term to truly accelerate funding in MCDR? We'll start with you, Mark.
I would start with something that's, I think it's already in the works, but let's accelerate that a little bit more, and that is having several places around the world in various geographic climatic areas that are really high quality test beds to compare technologies, to really figure out what are the data, are these things working in a well instrumented, well monitored way, on the one hand working with as intended from the CDR side, but also an ability to clearly monitor potential unintended and unexpected side effects.
I would go for clarity in finalizing the Article 6.4 rulebook procedures and modalities, so that countries, companies, and subnational actors have clarity on how the VCM interrelates to NDCs in terms of internationally transferred mitigation outcomes, or ITMOs, or corresponding adjustments, so that there can be clarity in the market for where this type of financing and investment can grow.
Yeah, so I think Mark kind of stole my wish here on the test beds, and so I'll go a little more ambitious. Is when I have conversations with friends about what I'm doing, they look at me in bewilderment, and it always takes me 10 minutes to explain, you know, why and what. until there is, a starting point for a conversation that is actually productive. So to the extent that this magic wand is actually a magic wand, have, a larger group of the population have bigger appreciation for the physical oceanography and marine biogeochemistry, to just understand and more broadly understand the urgency of the moment we're in and the opportunity that the ocean provides potentially.
Yeah, that was actually what I was going to say too. I take it in terms of within the public, especially on the policy side, and getting that universal bipartisan support for how critical all these different ocean CDR solutions are, and really creating a narrative that people can understand and get behind.
I wish for more people with a range of different backgrounds and experiences to see themselves as solvers in this space, to be the solution creators in this space. And I wish for more women leaders in this regard. We need more women in this space.
Well, I wish you have a magic wand like that. But I think those are great points. I know we are pretty much running out of time, but I think there are a bunch of takeaways, and I'm sure I'll miss some. But one is, I think the first most obvious one is the critical role different funders, different funding objectives, different funding philosophies have a really important role to play. I think the other is we need to actually look at MCDR more holistically rather than some individual components in the value chain, because just overemphasizing one while neglecting the other will not really help reach its potential. I think there's a compounding effect of funding. So we need initial seed funding to overcome or reduce some of the barriers so that attracts more progressive and larger funding, right? And I think public awareness is absolutely one of the things that actually resonates well with me. I struggle explaining to everyone I know what I do. And one thing is also, and I think Mark, you said this, you were saying that in the context of CDR overall, that we shouldn't be insular when it comes to MCDR, we should look at other CDR approaches. I would say that's true for actually the broader industry in general. I think there are a lot of lessons to be learned from other industries that were at the early stage and needed different mechanisms to accelerate. And I think we can't be insular in that view. We need to look at parallels from other industries. There are lessons to be learned, and that we should leverage and not make the same mistakes. So I don't know if you have time for questions. Do we have time for questions? No? All right. Well, thank you so much. I really, really appreciate it. Thanks again.